If 99% of traders lose, then why is everyone still learning the same strategies, watching the same live streams, and trusting the same indicators? You've been taught to wait for retracements, overanalyze patterns, and react to the market instead of reading it. But what if you could see the move coming before it even starts? That's exactly what we do here at Candle Theory. Let me show you how. You ever notice how you get in a trade and it immediately goes the other way? Or you wait for confirmation only to get in too late and take a loss? That's not your fault. That is how retail education sets you up to lose. At Candle Theory, we use a model called MCR, and it's built from the first 22 minutes of 9 o'clock, even before 9:30 hits. That range tells us where smart money is positioned and how price is likely to behave. Most traders wait for a retracement. We don't. Our confirmations are based on candle closures, not hope. That means we enter before the move happens, not during and not after. I'm going to be going through the basics of MCR. If you guys want more information about this model, which will definitely be needed, please join our free Discord. This is microcycle range for New York AM. This is a 22-minute range on the 1 minute that will form a high and a low. And we do not necessarily trade within this range. We trade once price has a closure above or below. We're going to be using something called wick gaps that is going to confirm the reaction. And then we're going to be using something called candle science, which is a candle count to get a trade away from current price, which is going to show current trend and help us getting into a better entry. So how do we analyze this? We can see that we have a wick gap above, which is just a wick that is around 25% the size of the body. But another thing that we can also take into account is dojis, because we kind of want to have a wick gap above our range and below our range acting as fortification for price, so that if we do not break above that range, we can at least see why, because price would be rejecting off of these wicks or dojis, and that's going to help us add confluence to our trade to get in or out or see if there's a reaction or not. So if we can see at the bottom, we did not form one. So we're going to have to see to a little bit left, and we can see our indicator marked out a wick gap for the 1 minute just below. Okay. But like I said, we do not necessarily have any candles to the left here that is acting as fortification for the top. So if we have a horizontal line, we can just look left and see that we have dojis created just above the range. Now what I'm going to be needing is price to have a candle body closure above these wick gaps and dojis or below this wick gap. Okay. There's going to be a few other things that I'm going to be going through once we get past these levels. But let's just see how price is reacting currently. As we can see, price is failing to close above this range. And if we look left, we can see why. We have this doji acting as our fortification. So we're going to be waiting for price to show us a sign to go lower, meaning that we need to close below this current candle that we're at to show that the 1 minute trend wants to go bearish. And then obviously vice versa, if we close above, that is an indication that price wants to go bullish. Here we can see the candle right after one candle. Our idea is that we want to look at it from a 3 candle perspective. So if this is acting as our candle 0, meaning this is the candle that we're looking at for current price to close past for us to get into a trade, we need to see that a candle closure needs to be happening past the 0 candle up to 3 candles. So if the first candle doesn't close above or below, that is okay, because we still have 2 more candles to wait for that to happen. If we do not within 3 candles have any closure, we're kind of consolidating. But that doesn't necessarily mean that price is going to stay inside of that candle, because price will always end up on one of these sides. Okay, so we can see currently the price wants to go bullish. We do not enter straight away. We want to wait for price to get close to our MCR range, as there is a 70% chance for price to close on the other side. So that means we're going to expect some sort of retracement. So let's wait and see how price reacts from this initial zero candle. And then we're going to do something called candle science and get out of this move for a trade. Here we can see price wicked back into our initial zero candle, which also matches up with our doji as fortification. So remember, right here we used the doji to reject, and now we're going to be using this doji as support to go bullish. And also this initial zero candle has a wick that is 25% at least the size of the body, so that is also an area that price can reject off of. Now, how do we currently know that price wants to continue in that direction? Remember, I just spoke about this zero candle. This is now going to become our new zero candle, as it's rejecting from an area of interest. We can see from that area of interest where current price will be going, because the first reversal will always be from the candles itself. So let's see, within 3 candles, do we close above or do we close below? So now we're going in to the bottom of this wick gap. If we do not find price going below, it's going to find support and head to the other side of this candle. Here we can see within 3 candles, 1, 2, 3, we closed above. This is going to be our entry for a buy. I'm going to have my stops just below this current price, and then we can run it towards the 4th standard deviation of this session. Let's see how price plays with this. Here we can see a beautiful play that happened from this initial buy, and it touched our 4th standard deviation. Now another thing, our model has a few good tips. We can reverse from our standard deviation that is formed from our MCR range. I want us to look at how price touched our 4th standard deviation. We tick to a wick tip. We then have a zero candle, as that is the candle that entered our area of interest. How many candles did it take for price to head lower? 1. So we can get back in for sells, have our stops above that initial candle, and then I'm going to be running it to the bottom of our MCR. Let's see how price plays from that. Everything I just showed you, we do it live twice a day inside of our Discord for free with our members. We're not here to sell you signals. We are here to destroy the guru industry and replace it with real trading education based on how price actually moves. Every weekday at 10 a.m. New York, we have chart breakdowns teaching our model for new members. So if you're tired of losing trades, recycled YouTube strategies, and people who have never even traded a real account, join our free membership. Link is down below. I will see you guys in the live.